It's time for the Your Personal Bank Show with Ferenc Toth, financial literacy educator and speaker, entrepreneur, and chairman of the board of a bank in formation. Take charge of your financial future with Your Personal Bank. Now here's Ferenc Toth.
Welcome to Your Personal Bank Show. What to talk about today? I'll tell you what, there's just so many different topics, so many different aspects of things that we could discuss. And I guess what I'll just kind of do is share a few stories of some things that have occurred recently with several clients and situations that we've been able to accomplish that are pretty exciting, frankly. And it's a lot of fun working with folks, helping them, educating them to a different way of thinking about money sometimes and improving their financial situation, often dramatically. And I guess that's, from a personal standpoint, that's where I get probably my greatest satisfaction from. My wife often talks about, she goes, prior to COVID, when I would meet with clients in person or at the office or whatever, she goes, I can always tell when you've had a good day because you're glowing. I said, what do you mean by that? She goes, well, you're all excited because you talked to somebody and they got it. And I'm like, you're right. Part of being successful in life is finding what is your passion. I share this with young people all the time, and we talk to our daughters about this all the time. I have 2 teenage daughters, and by the way, for those of you who say, it's so funny, I've got a 14 and a 16-year-old daughter currently, and they say, oh, I'm sorry or whatever. No, they're truly a blessing. We got 2 wonderful girls. They're just sweethearts, and the COVID thing, and them, they're actually both in school from home, doing online high school. Our younger daughter started a year before, not 2019, but it worked out great. Both of them are. It's really cool as a family, and I'm working from home too mostly. So, our family, we have lunches together most days and dinner, so it's kind of a neat thing, and we get to spend a little that extra time. So, in some respects, this whole shutdown thing has been a blessing. And obviously, my family, my wife and my daughters, is a big part of my life that's very important to me. But from a personal standpoint, of course, gives me great satisfaction. So it's fun. We're enjoying it. But from a professional standpoint, yeah, it's true. What I have found is, I could do the normal routine that everybody else does out there. They talk about stocks, bonds, mutual funds, diversify. Mantra, I call it. And again, there's nothing wrong with that. But I've always enjoyed kind of learning about new things, finding a better way, building a better mousetrap, if you will. Entrepreneurial spirit. I've owned 4 businesses and in the process of starting a 5th, a bank, an FDIC-insured bank. Talked about that several times in previous shows. And so when I came across the personal bank concept, and then we've expanded upon it to improve it further since, it made a lot of sense to me, and I got very excited about it because, for one, it wasn't something that was commonly shared or known out there. And I've shared this story so many times. I can't tell you how many times I've, spoken at different workshops, investor workshops, various things. I'll have 100 people in the room or whatever, and I'll ask how many are familiar with the insurance banking concept, and literally I'll get 2 or 3 hands to go up. I mean, I'm asking, and these are people who are, actively involved in learning about money and improving their financial situation. I mean, they're spending half a day on Saturday attending a workshop, right? So when you get 2 or 3 hands, when I ask who's familiar with this, who's ever been introduced to this, who's ever looked at it, and you get 2 or 3 out of 100, that just verifies, and this is even fairly recent, okay? That just verifies that the information, the knowledge is not there. It's not getting out there, and that's one of my motivations for doing the radio show, is to educate folks on this financial tool that's very infrequently shared. And so many people, once they're introduced to this idea and start to really take a look at it and look at the numbers and how it can impact their lives. By the way, you can do the same thing at yourpersonalbank.com. Contact us. I'll be happy to talk to you about your situation. You get to talk to me, okay? And we'll look at your situation, and we can run some numbers. I'll show you what I'm talking about. And so many people are so pleasantly surprised by, wow, this does more than I thought, or this could make a bigger difference than I thought. I'm like, exactly. So that's what excites me. And like I said, what I was starting to say is following your passion is so important in life. Folks that, grandparents out there, you know what I'm talking about, or parents, when you're talking to your kids and grandkids about these kinds of things, say, look, find your passion and the money will follow. If you do what you love to do and it doesn't feel like work, you've heard that many times, and you do it to the best of your ability and you have a passion for it, you are going to excel in that field. And over time, you build, you grow and you learn, you're gaining that knowledge. You're going to excel in something. And that's, thankfully I've been blessed in that arena. I found my calling. I found my passion. And when I was introduced to this concept, I just recognized immediately that this was what I was going to start sharing with people, for the foreseeable future. And that was 7-8 years ago. I was been in the financial industry, as I said, 22 years. I was doing the retirement plannings, the IRAs, the 401ks, annuities, all those kinds of things. A lot like many other people that, you may have encountered or heard or talked to. And I did it. Did it well. I was top 10 in the country, literally, in production, several years with the top 1 or 2 companies in the country. So it wasn't that I was bad at what I did. I wasn't. If anything, I excelled at what I did because, one, I believed in what I was doing. Understand, when I was doing that retirement planning and the annuities and those types of things, the clientele I was dealing with were folks in general who were looking to reduce market risk, guarantee income, supplement retirement, and those kinds of things. And we still do those things. Don't get me wrong. When I run into the scenario where that's a situation that makes sense for somebody, we can show them the best income products out there that have the guarantees and guaranteed lifetime income and those kinds of things. And those are all great tools, don't get me wrong, for the right person. See, that leads me to a pet peeve some of you heard me talk about. When somebody says this product is bad or that product's bad, that's not advice. That's just that person sharing their personal bias, okay? Maybe they had a bad experience, or maybe they had the wrong, or more likely, they had the wrong tool that didn't fit their goals. So it's kind of like putting a round peg in a square hole, right? So I run into that all the time, by the way. When I talk to people, I'll ask them often, what are your goals? What are you trying to accomplish? And how's it going for you? How's it gone lately? Those kinds of things. It's amazing how often I'll be hearing one set of goals, yet I'll be looking at their financial statements and various things, and the tools aren't really designed to accomplish their goals. In fact, in most cases, what I find folks are taking on far more risk than their intentions, what they're stating they want. And by the way, there's study after study that backs that up, by the way. Or when you share with them what the inherent risks are of certain investments or assets they have, they're surprised or shocked it's more risky than they thought. I have a personal story I can tell in that arena. When I first started getting involved in real estate investing back in 2001, we started buying HUD properties to fix them up and rent, and basically did lease options. Okay. And we did well with that. We did something like 30 or so of those properties over a period of about 3 years. And we did 3-year lease options. But what we found out, what had been advice we thought was good advice was outdated. And what ended up happening is we started getting all these properties back. And I guess I'm running out of time, so what I'm going to have to do is share in the next segment what happened. I'm going to tell you what happened in terms of all that, the mistakes that we made, the lessons that were learned, and then what I would do different going forward so you don't have to. Because one of the definitions of wisdom is learning from other people's experience. So stay tuned. Don't miss it.
For more information on Your Personal Bank, feel free to contact Ferenc at yourpersonalbank.com. Back to the Your Personal Bank Show with Ferenc Toth.
Well, I was starting on a personal story, and then I got cut off there for a minute. So commercial break, you know how that goes. That's radio for you. But anyway, as I was starting to say is, there's really 3 ways to learn. And some people know this, and if not, I'll remind you. If you already know, I'll remind you. But there's really three ways to learn information, and you can read books. That's a good way. Books or online or that kind of thing. Good sources. You can learn from the School of Hard Knocks. Certainly, you'll learn the lesson and not forget the lessons. But that one can be the hardest way to go and most expensive and waste the most time. But like I said, you don't forget the lessons when you learn from School of Hard Knocks, or you can learn from other people's experience, or in other words, mentors. And that's what wisdom is. Definition of wisdom is learning from other people's mistakes, right? So I'm going to share the rest of the story because hopefully somebody that's listening will benefit from this. I hope a number of people do, and not make the same mistakes that I made and then do better going forward. I mean, that's really what it's about, right? So like I was starting to say is we had gotten involved, my wife and I involved. I understand I'm in the financial world, I've owned an agency, doing retirement planning for folks, IRAs, 401ks, and annuities and all that kind of good stuff. And one of the top producers in the country, making a really good income at the time. My CPA said to me, hey, you need some tax deductions because you're getting creamed on taxes. That's what kind of started all this. And I said, what would you recommend? Because I didn't know any better. And I'm a financial advisor. That's the thing. Most people think just because you're a financial advisor, you know everything about money. That's far from the truth. Just because someone has a license doesn't mean they're an expert. And even though I not only had a license, I've been doing it for some years, and I was an expert in retirement planning, I wasn't an expert in like tax planning, reducing taxes and things like that yet. I hadn't been introduced to those tools yet. And no one had thought clear. So my CPA says I need to how should I say, do something to reduce taxes because I was getting creamed, right? So I said, well, what do you recommend? He's off the cuff basically said, well, real estate has a lot of deductions. So I had an interest in investing in real estate anyway. Decided to pursue that, read some books, like I said, didn't really have a mentor or anything, but took action. And like I said, purchased over the next 3 or 4 years about 30 rental properties that we lease optioned out because one of the books said to do 3-year lease options. Later on, didn't know at the time, thought that was the best advice. Later on, learned that was outdated advice. What we found out the hard way was that folks that have bad credit don't qualify in 3 years. In most cases, their credit doesn't change. In fact, I think we did 32 or 33 properties total. One qualified for a loan and bought the property. So we ended up getting all these things back. And most of them didn't re-up or re-rent. They moved on, right? So we're getting these properties back. And in Phoenix in the early 2000s, what happened? Well, the property values went up. And we were in a situation at that time, we were averaging $300 to $400 positive arbitrage, or I should say positive income per property on average. Today, that'd be over $1,000, easy. But based on those numbers, that was still pretty good. Or we could sell it and make, on average, $30,000, $40,000 profit after fees. Well, I'm greedy. I'm going to take the $30,000, $40,000, not thinking about the longer term. Plus, the advice was kind of was weighing both options of re-leasing them out or re-renting them out versus selling. And my real estate agent at the time, who had helped us purchase all these properties, I was leaning on him for his advice, not realizing at the time that his vested interest was not the same as ours. And here's what I mean by it. So if we re-rented the properties out, he could have found the renters and made a small commission. But if we sold them, of course, that would have been a much bigger commission. And he introduced us to a builder, bought some land, and we built some properties and developed, which allowed him to create another commission there. Now, what I will say is the development project worked out really well. We ended up selling almost all of the rental properties. We got them back, put the money in the development project. We built lands, roads, everything, built houses, sold them. It worked out great, and we ended up making a great profit on that. So his advice at that time, short term, was good. Now, I made the fatal mistake at this point. I'm like, well, that's easy. Let's do it again. So we did. We bought some more property in Phoenix, in Scottsdale, Cave Creek area, and developed some of those properties and whatnot. And that's when we get into about 07, 08, real estate markets crash. We have a bunch of real estate, various properties in various stages of development. And that's when I come to realize, again, those properties, some of them lost 2/3 of their value almost overnight because, who wants to buy land when property values are dropping everywhere? And the reality is we took a huge hit. Overall, we did make money in real estate, don't get me wrong. But that's when I came to realize how much risk was involved in developing property. And see, up until that point, I had no idea. Understand, I'm a financial person. I'm in the financial world, but I wasn't a real estate expert, okay? Even though I had a pretty fair amount of experience at it by this point. But I still didn't really understand the risk involved in developing. Looking back on it, frankly, and I don't like to think about this too often, I don't like to share it because it just frustrates me. But the fact is, we would have been much better off financially keeping those. I think at one point we had 22 properties. Keeping those and re-renting them out, releasing them out, whatever, and just getting the long-term cash flow from them. Because based on what ended up happening, of course, if the property values dropped but we still had cash flow, who cares? Of course, they came back. They've grown since then. We'd have an income to live on that today that would, that's not there because of the result of everything that happened. My point is, we took on far more risk than we even realized or had any idea. Okay, it seemed to be the right thing to do at the time, and short term, it did make some money. I find that to be a very common scenario when I'm looking at folks' assets, their allocations, their investments, in terms of and the risk tolerance and what they're telling me they want. What I'm trying to say is, I'm putting a personal story on to what I run into on an everyday basis. I find an awful lot of people, not everyone, but an awful lot of people I run into that when it really comes down to it, and then they realize, again, two things. They either just don't realize the amount of risk they're taking versus what they're comfortable with, and the two are not matched up, or I'll get the statement, well, I did it because I didn't know of any other options out there. Didn't just, what else are you going to do? Well, I'm here to tell you there are other options. Contact us at yourpersonalbank.com. We'll share those with you. You don't have to take on the risk if you don't want to. You can have a portion. I've said this all the time. Whatever your risk tolerance is, a certain portion, I think most everyone agrees, should be safer, more consistent, income producing. For some people, that's a higher percentage than others. Okay. But the reality is, some of it should be there. And there are people, frankly, who just aren't good at tolerating risk at all. And they'll tell you that straight up. Okay? And there's actually a lot more people out there than most people realize. They just don't, they want to sleep at night. How's that? They just don't want to worry about it. Okay? And they're security focused. Okay? There's nothing wrong with that because although people argue about that and various things, when at the end of the day, it's their money and it's their emotions and it's their personality and it's their life experience and how they want to live their life. And that's what's important in terms of what makes them happy. Stay tuned in the next segment. I'm going to talk about a little bit more on some scenarios on how we have helped people, and it's been a lot of fun.
For more information on Your Personal Bank, feel free to contact Ferenc at yourpersonalbank.com. Back to the Your Personal Bank Show with Ferenc Toth.
Welcome back. I've been sharing some personal stories about some of our experience in terms of the real estate investment experiences I had, both good and bad. Here's the thing. Overall, I had a great experience and still do some real estate, that kind of thing. Learned a lot of lessons from it, much more knowledgeable than earlier, obviously. And it hasn't been all bad because, like what my wife has said too, is it's made me a better advisor. As she said, you make lemons out of lemonade, right? So, or lemonade out of lemons, whatever. The point is, those experiences have allowed me to have discussions with clients and prospects countless times in terms of helping them really clarify their process in terms of for example, whether they should do a deal or not, and those kinds of things. And it's been immensely gratifying to be able to help a lot of people, particularly, just anybody, really. One of the comments I make all the time is, look, I'll use a perfect example. I had this one gal, so she's a longtime client of mine, but she also does real estate investing and things like that. And she was on the fence about whether she should close on this deal or not. She got surprised by an extra expense. It was extra $12,000 she had to come up with last minute. She didn't have it. It was, she did. We got it through the personal bank. That's what saved the whole situation, of course. She didn't realize she had it. I said, wait a minute, you got the cash here. We can access it through the bank line of credit, still pick up positive arbitrage, and you can do the deal and move forward, no issue. And that's one of the benefits of the personal bank is, hey, when opportunities present themselves, you got cash and monies available, ready to go, and you can deploy them at any time. Or if you're in an emergency, you got monies ready available in case you have an emergency. Powerful to have that kind of stuff. But then I said, but there's a bigger question. You have the money to do the deal. That's not the issue. The bigger question is you have an opportunity to step back, because she was starting to question the situation because the numbers had changed because of this extra money and such. I said, you have a situation now where you can analyze, relook at this, and see if you still want to move forward or not. And the thing is, whether you do it or not, there's no skin off my nose. But I said, the problem you've got, and this is a common situation, is everybody involved with her around that whole deal had a vested interest in her moving forward, just like my real estate agent did when I decided to go into developing properties, from long-term cash flow to development. And I said, think about it. The real estate agents involved on both sides want you to close the deal. The seller wants you to complete the deal. The mortgage broker wants you to do that because they get paid, okay? The title company's already done their work. They want to get paid. So the bottom line is everybody involved, everybody that was around her in this process, all had vested interest in her moving forward and closing the deal. I said, here's the thing, and you want to listen to me because it's no skin off my nose either way. You do it, don't do it, doesn't matter. You're already a client of mine. I already pointed out you have the cash available through the personal bank. You can pick up the positive arbitrage. From the personal bank standpoint, you're perfectly fine. Either way. So we talked a little bit, and we discussed some things and some numbers, some pros and cons, and of whether she should move forward or not. She ultimately decided to do so, but we actually, I brought up some ideas on where she was able to negotiate some of that, the costs, and she got it for a better deal than she thought, because I said, look, here, one of the things in negotiation is the willingness to step away is a powerful bargaining chip. And again, all these folks around you, there's 5 or 6 folks around her involved in this whole scenario, all had vested interest in her moving forward. And that's a not uncommon situation that we run into in life. We're trying to make a decision, and we're trying to get advice, or trying to get a second opinion and things like that. And unfortunately, many times the folks around us are the vested interest is in us either doing or not doing that, moving forward or not. And so it's sometimes tough to, weigh that advice. And, obviously in the financial world, we all struggle. That's a challenge we all have. Now, whether you do the personal bank or not, if you move forward on it and do it, of course I get paid a commission. That's true. I tell that folks straight up. But the thing is, I'm in a position now, and I guess that's what you want to look at is, whether you personally do this or not really isn't going to change things for me either way. Now, of course, I'd rather you did it than not. I tell you straight up, and I'll tell you the reasons why. If the reasons make sense, we go through why. But the reality is I know this. I've been doing this for 22 years. I've got so many clients. Our company has over 5,000 clients. Staying busy is not a problem. If anything, it's the opposite, okay? I am on the radio, which even keeps us busier and keeps me busier. But I'm doing it because I enjoy the education side, as I started to share, and that's where my passion is getting people to understand how this can work for them. And when it clicks, whether it's an advisor, when I'm working with a new advisor in our agency or a new client, that fires me up, okay? And we get, this goes out to tens of thousands of people a week, this show does, and on the radio and podcasts and everything else. So I'm constantly having people reach out to me. I've been in the business 22 years. I get referrals on a weekly basis. Being busy is not the issue. And I'm not saying this to be mean or anything like that. It's just, if you personally do this or don't do it, it's not really going to change my life one way or the other that much. It's really not, because, I've got 10 other people to talk to this week. And sure, I'd love to work with you. Don't get me wrong. I'll do the best I can to help you and be professional. But is the kind of person you want as an advisor where, yes, of course I'll get paid for doing it, but I'm not counting on it either. It's just not, it's not going to change my life one way or the other, okay? So, and then once you do become a client, what's really nice is, like I said with this gal, if you're doing investments in other things, other assets, look, whether she did it or not made no difference to me whatsoever. So I'm able to be a bystander, a third party, non-biased, totally, whatever. And just give her, I've done this for so many people, so many clients over the years. I've owned so many different businesses. That's why I have so many business clients, because I'm able to give them some solid, basic business advice. Sometimes it just makes sense and helps them with their businesses. I've been in the financial industry for so long, and I've seen so many different scenarios, the same thing from investment. Should you do this? Should you do not that? How, all those kinds of things, and real estate too. So as my wife says, I'm a Renaissance man. I've always kept busy. And even today, just being in the financial world wasn't enough. I had to go and try to start a bank, which we will get that. I'm confident we'll get it up and going and open. COVID has set us back, of course, but we'll get it done. And the beauty of that, though, is it's allowed me to get a whole different perspective on the financial world and a whole different arena. Frankly, after 20 years in the financial world, I knew very little about the banking world. And I know a whole lot more of it now than I did a couple of years ago before we started this whole process of starting a bank, which has given me a whole nother level of knowledge and experience that I'm able to share with people, and like doing this show and with clients and stuff. And frankly, it's educating is, I guess, what I really enjoy, helping people understand their finances a little bit better, understand how to get to their goals a little quicker, a little faster, a little smarter, more efficiently, grow your money faster, get compound interest, reduce taxes, all those kinds of things. Again, your personal bank is a big part of that. It's not the only thing we do, but it's a big part of how we build that financial structure for most people. And like I said, there's so many different benefits to it and ways it can be utilized to enhance your financial future. That's why it's such a big part of it. It's a big tool. So stay tuned in the next segment. We'll talk about some of those reasons why and some other folks I've worked with on this. Stay tuned.
For more information on Your Personal Bank, feel free to contact Ferenc at yourpersonalbank.com. Back to the Your Personal Bank Show with Ferenc Toth.
All right, we're rounding third, wrapping this up today, but talking about some situations where I've worked with clients where the personal bank made a lot of sense for them. I've shared some of the personal stories, particularly in my experience of real estate investing, both good and bad, and most importantly, some of the advice that was given to me along the way and some of the conflicts of interest that were there. And like I said, I try to avoid that with folks in terms of the conflict of interest and things like that. One of it is the biggest one, like I said in the last segment, is if you're looking at doing a personal bank or not, what I'm going to do, one of the things I always tell people is, look, I'm going to share with you the reasons why. We're going to look at the numbers. And frankly, just in most cases becomes a no-brainer. It's not like I'm trying to convince somebody that this should be done. Again, we look at the situation, we look at your goals, ask you the questions you're trying to accomplish. If you're trying to create some safety, some security, some consistency, some income, you want to have access to monies, you want to reduce taxes, those are all easy quantifiable things that we can run the numbers on. I can show you how it works, and you'll see the difference. I mean, it's pretty straightforward. If you already have a policy or you're looking into one, be happy to compare illustrations. All I need is the information from the other one. We'll do an apples to apples, run the numbers. The differences are striking in many cases. I mean, I'm talking about when I'm doing comparisons, sometimes that's the most fun. Somebody who has one or is looking into it. I just had lunch last week with a gentleman who was a new client, of course, and he wanted to take me. He took me out to lunch. I wasn't expecting that. We just were meeting for lunch. He's already a client. Everything was already done. We just because of COVID, we hadn't actually met in person. We'd done everything online, of course, right? And things were, so we met for lunch last week, and just because we wanted to, and had a great meeting. It was awesome. And he insisted on buying me lunch. And, I wasn't expecting that. But that's a common experience I have with clients because I've brought something to the table that made such a difference for them. And it's not just the normal. Like I said, I could do the same thing that we all hear about. Like I said, it's the stocks, bonds, mutual funds, diversify mantra, if you want to call it. And again, I'm not knocking that. I'm not saying that's bad. It's just, we all know there's 100 people out there that do that kind of thing. This is so different and so striking and makes such a difference for people that's the common experience I get when we run the numbers. So, like, for example, this gentleman, he was looking at it, had a friend sort of a friend, basically, who was sharing, had some knowledge about the banking concept and had shared with some numbers with him, but had limited experience, frankly, and I shared some numbers with him. And bottom line was, at first, he said, well, I'm going to go ahead and go with my friend. And all I said to him was, that's fine if you want to do that, but to go with your friend without even looking at, I pulled all the numbers for him because he'd asked me to initially, and then he kind of pulled back and said he's just going to go with his friend. That's not an uncommon experience, by the way. Relationships are important, don't get me wrong, but if you're doing a financial decision based on a relationship versus the facts, that's not necessarily wise. So my point was simple. I said, look, if you want to go with your friend, that's fine. But to choose to go with your friend without even comparing the numbers, and by the way, I have the numbers compiled for you, and there is a significant difference, significantly better. But not even to look at them and consider them and just go with your friend without looking at the numbers, that's not very wise. Now, I put it to him that way. And at first he kind of responded. He just really didn't respond to me. And he called me a week or so later and he said, I thought about what you said. You're right. I did ask you to run the numbers. I should do, I should do myself the service. It's my benefit to look at those numbers. I said, exactly. So we did. And I didn't hold it against him or anything. I said, in fact, I told him I appreciate you being honest. I was being honest with you, and I appreciate that honesty. And he even said to me at lunch, he goes, that was not an easy call to make, to go back and say, I think you were right. I should at least look at the numbers. So exactly. I know it wasn't, but I'm proud. I'm impressed that you did it. And this was a younger gentleman, by the way. So I think he's going to go places. I've said that to him. If he keeps those kinds of attitudes going forward, he's going to go places in this world. But the reality is this. We looked at the numbers. And when we got done looking at the numbers, which didn't take but 10 minutes or so, he's like, wow, I had no idea that you're right. This is significantly better. It's a no-brainer. That's the thing I love doing when I'm comparing numbers. So if you have a policy, I'm going to tell you, boy, contact us, yourpersonalbank.com. I'm telling you, you're doing yourself a disservice if you don't. I don't know any other way to put it, because just about every situation I've run into, and I can't guarantee that we'll beat your numbers, but just about every situation we've dealt with, we have. And not only a little bit, in many cases, by a lot. And I'm talking 20, 30% differences in many cases, sometimes more. Anyway, my point is, he's a new client and all that, and he thanked me for everything. And, we're looking forward to working together. And I've given him some advice. He's looking at some business opportunities and things like that he's working on. I've given him some business advice and all that because of my business background and experience. My point is, contact us at yourpersonalbank.com if you have any kind of policy that you're trying to grow cash with. Please contact us and at least run the numbers and compare. Do this for yourself. And, if we can't beat the numbers, I'll tell you that straight up. In fact, I'll show them to you head to head. It's very simple. I've said this often to people. Look, you don't have to like me. You don't have to trust me. I mean, hopefully, ideally, you do on both of those counts. But to not compare even because of a relationship or any other reason for that matter makes no logical sense. Just do the comparison. And I don't care if I've compared on policies folks have had for 5 and 10 years even, and we've been able to beat the numbers. It's that significant of a difference. So I don't care if you got it 2 or 3 or 5 or maybe even 10 years ago. Let's take a look. There's been significant improvements in these products, by the way, over the last 3, 4, 5 years, just so you know. So often cases, even though maybe you're a little older, we can still beat the numbers. That's what I'm finding in most cases, to the point where it's enough of a difference, it's worth making the switch. If it isn't, I'll be the first one to tell you that. The numbers, in fact, will tell you that. It'll be straight up. It's like this or that. It's not a hard decision when we're comparing numbers. It's a no-brainer. And that's the comment I get from folks, these clients, prospects that contact me all the time is, I'm not the one saying it's a no-brainer. They are. Okay? So let us do those comparisons. Contact us at yourpersonalbank.com and let me show you the difference. Let me show you how much better of a tool, if you already have the tool, great, but how much better we can improve on it for you. And then we can bring in the bank line of credit on top of it and allow you to get that positive arbitrage when you do access those funds. Because you might as well make money, interest on money you spent, right? If you have that opportunity to do so, why wouldn't you? I mean, that's kind of the other part of it is growing the money is one thing, and you want to maximize the growth and minimize the taxes and all that. I totally get it, and I'll show you how to do that. And comparing the numbers, like I said, we'll do that. But then when you add on the additional factor of we're bringing in the bank line of credit, and I've researched and found the banks with the lowest rates available in the country, and there's not many banks out there that offer bank lines of credit against the cash value of a policy. But there are some that do. Now, you just can't go down to your local bank and find that. I can tell you that straight up. But I found the best rates in the country and which banks work with which companies too. All right? We'll match up the best one for you. I'll show you the numbers and you'll see exactly what I mean. So contact us at yourpersonalbank.com. And as always, stay tuned to the Your Personal Bank show on Money Radio at 1510 a.m. or 105.3 FM.
Listen Tuesday at noon and Thursdays at 1 for more information on Your Personal Bank. Contact Ferenc at yourpersonalbank.com. This show is designed to provide accurate and authoritative information. The presenter and guest on this program do not engage in legal, accounting, or tax advice. Professional advice regarding your situation should be sought if required. Products and riders may have limitations and may not be available in all states. Excessive unpaid loans may affect performance. Distributions may become taxable if not managed properly. Replacements may not be suitable for everyone. There may be charges when replacing coverage. Compare when considering a replacement. Dividend rates and bank line of credit rates may charge. Contact yourpersonalbank.com for current rates.